Good evening, everyone, and welcome to the Daily Volatility Box Report for October 7th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we had one trade that set up across the board in all of the indices, which gave us our T1. And we'll talk about something funny that happened with our first target there, but that was our winner for both of our contracts. And then we had a second trade set up in each of the four indices, which unfortunately was not a winner. And so that took our winning rate from 100% down to 50%. And in the S&P, we ended the day negative, and same with the Dow. But in the NASDAQ and the Russell, we were still able to keep some of our profits to help us end the day positive. And then we also had one trade that set up in the crude oil futures. And this trade was a break even, and so while we have 100% here, the P&L was actually zero, and so this is just a scratch if you ended up not taking any afternoon risk. And if you did take the afternoon risk, then you're currently up on this trade, and it's making its way to, I believe, its first target. And so today we had a total of 9 trades that set up for a total winning percentage of 55.5%, where that second trade in the S&P, the NASDAQ, the Dow, and the Russell is what hurt us since we were on the aggressive volatility box. And our total P&L for the day was a positive 910. And so now, if we look at the events for tomorrow, there's really two key things that I'm looking at. One is the core PPI numbers, and then the second is the time when Powell is speaking. And so while on Friday we didn't see any sort of volatility around this event, we see that he spoke today. We saw some volatility around price action as well. And so this new adage that we're going to start saying is, when in doubt, use the conservative volatility box. And I think that's going to be true for both of these events as well. Keep in mind, these are the estimates numbers that you just want to compare what the actual results are to. And so that'll be the news story if we come within expectations or not within expectations. But again, if you're looking to trade this actual event or say the volatility around it, you may want to try to just use the conservative volatility box and see if we get price actually fall down that far, which then gives you just a little bit better of an edge. And I think that's just the new sentiment. And we'll talk about what would have happened if you, say, used the conservative volatility box on today's news activity versus the aggressive, which is what we used. And then one more reminder, we came out with we released our latest free indicator earlier today. We're calling it the Smarter Earnings Indicator. And I think many of you have tools out there like CML, so on and so forth, that really help you capture the pre-earnings and the post-earnings optimism along with patterns. And I think those are just phenomenal, and there's no need to try and reinvent the wheel there. But I think one thing that's sort of missing is the actual day of earnings. And so I'm not sure that very many folks are looking to trade that. But I think there's some interesting patterns there, which is what we found in this indicator. And so what you'll see is we have two different strategies that we've plotted here. One is if we gap up or gap down from the actual earnings event, and then if that's on a miss or a beat. And then we also have gap and goes, and again, if that's on a miss or a beat, and then what our average move is after if we do end up beating or if we do end up missing in terms of an actual dollar amount. So this indicator is available for free. I think with earnings season right around the corner, this should hopefully help you trade the actual day of earnings a little bit smarter, and hopefully it just adds a little bit of an edge to your trading arsenal. If you'd like to download it, it's available on our website, tosindicators.com/indicator/smarter earnings. All right, now let's get into charts. So we'll start with the S&P futures, and we'll start the morning by drawing our line, and we check to see whether or not we breached either side's aggressive volatility box entry lines. We see that we very clearly hadn't here, and that was our sign to continue to use the aggressive volatility box. Then we had a news event come out, some news around China, and that gave us an opportunity to then short the market, and our stop was outside of the volatility box where we gave it 7.5 points of room. Our first target was at the 7.5, which was actually below the T2 line, and this was true across the board in the NASDAQ, the Dow, and the Russell. And so when we saw this pattern unfold, the reason this happened is because our T2 line shifted up as we continued to make higher highs. Our T2 line also shifted up with it. And so when something like this happens, I'm typically looking for my trades to give me at least a 1-to-1 risk to reward. And so I moved my second contract to the same T1 level, whereas before it was underneath it. Now I've just moved up the T1. And so both my contracts are taken off at that same level, and I'm just looking for price to give me that much of a follow through. Our second trade then came as we had an opportunity to reverse and go long, and in this case we had our stop outside of the volatility box where we gave it 8 points of room, and we were stopped out into the close. if you say happen to be a trailing stop person, then you might have been able to trail your stop up here and reduce the damage on this trade particularly. But for us, this was an 8-point stop out. Now, something that's interesting, and so we talked about this earlier, which is when in doubt, use a conservative volatility box. So now you see that we have this plus 1,000 reading. You can also see that we have this China news that's coming out. And if you're, say, a more conservative trader, you might have made the decision to switch on over to the conservative volatility box. Perfectly valid. If that fits your trading style, that's what you should do. And that could just be a very smart rule altogether, because now if we start to click the conservative volatility box to see what happened today, sure, you missed out on that first trade, but you did get that second opportunity to go long, and that was almost perfectly to a T, right? Where price slammed right into that conservative volatility box, and you would have gotten the follow through that you were looking for, along with an edge entry where you weren't really sweating. Compared to, say, the aggressive volatility box, where today we breached into the clouds. And so if you're actually watching this price activity unfold, this right here, for example, it could have made you a little bit scared, right? You see price coming right into the volatility box. We go to the very tip of it before we start to bounce. And at this point, maybe hope is kicking in. You're trying to see what kind of follow through you might get or might not get before you then have this ultimate puke. And so watching this today was not necessarily easy on the aggressive volatility box. And so if say that makes you uncomfortable, then switching on over to the conservative is perfectly valid, especially when you have, say, news hit the market like we did today. And so now if we just quickly cycle through all of our charts, we'll see something very similar. So in the case of the Dow, we had that same first trade setup. Our T2 was outside of the outside of the target line as well, and so we took off both of our contracts at a 65-point gain, which was our first contracts target based off of our risk. And in that case, we got the follow through, and on that second contract, we were stopped out once again into the close, where our stop was 70 points wide, and we ended up hitting that stop right here. And once again, if you switch to the conservative volatility box, you can see that this captured price action much better today, and you did get a little bit of that follow through into the close. Now, cycling through to the NASDAQ, you'll see a very, very similar story painted here. On the NASDAQ, for example, you can see before we switch on over to our aggressive volatility box that the conservative volatility box did not actually give you an entry, whereas the other tickers did. And you can also see, if we switch to the aggressive volatility box, that the NASDAQ did not breach that far into the clouds than its at least counterparts did in the S&P and the Dow, right? And so you can use this information real time to start to assess which markets are more volatile, where is price acting a little bit better, just in case you were trying to pick and choose a market that you might want to be involved in. For us, this was our opportunity to go short once again, stop outside of the volatility box, 25 points, and we ended up taking off both of our contracts once again for the 25, and then our second contract, we ended up getting out for an 11-point loss into the close. If you happen to be watching, you could have also gotten out for a perfectly break even if before price actually started to reverse. For us, we were able to mitigate it, 11-point loss, and so we still ended the day positive in the NASDAQ futures. And then finally, if we take a look at the Russell, we see a very similar story, and here you can see price actually breached through the clouds, and so you have real-time information on just the type of volatility that the Russell market is facing off of this news event. We had an opportunity to go short. We did get the follow through for our first target, which was 4.5 points, and then we had an opportunity to go long and try and catch this move off of the entry line. Our stop was outside of the volatility box, which was not hit, and then into the close, we were able to take this off for a 2-point loss. And again, we missed the opportunity to get out for a perfectly break even, but you also did have that opportunity in the very last candle before the market closed. And so you could have gotten out either for a break even or just a minor loss. And that's what we had right here in the Russell. And if we watch the Russell on the conservative volatility box, same exact thing, right? When in doubt, use the conservative volatility box, gave you a much better entry today off of the news event. And you did get the follow through that you were looking for, and you didn't sweat as much as I think the aggressive trader did today. And I think you still ended the day positive as well. And so that's just a difference between the two different trading styles. And finally, the trade in crude oil, where we had an opportunity to go long. So we were on the aggressive volatility box. We had no signs to really switch on over. Didn't breach either side's aggressive volatility box entry lines. And so our opportunity came as we had price fall into our aggressive volatility box lines right here. Our stop was outside of the volatility box, and we didn't see the type of follow through we were looking for right away. And so for us, we didn't want the afternoon risk, just took our contract off at break even. But if you, for example, did not take that contract off, then we're, I think, marching towards, you might have hit your first target or been really close to it since your stop was outside of the volatility box. And then your first target was the same, I believe it was 35 cents, which might be coming up here right around 53.20-ish. And so we're close to it. And so if you're still in this trade, then it's looking good for you. All right, so once again, today we had a total of 9 trades that set up for a total winning percentage of 55.5% and a total P&L of 910 using the aggressive volatility box. And again, for tomorrow's events, keep in mind we're planning to use the conservative volatility box. We saw how beneficial it was today, and we'll continue to follow that game plan for tomorrow and the rest of the week. We'll keep looking at the subsequent events that come up. All right, hope you all have a wonderful night. Take care and see you tomorrow.